afternoon. Hope everybody's doing well today. Well, we just got done with Turkey Day. I'm sure we're all stuffed. Great holiday time, and now we're back to Saturday. It's Small Business Saturday. Everybody, don't forget to shop local and support your small businesses.
Yes.
Hope everybody enjoyed some family time. I'm sure you're out on the road today doing a little shopping.
That's right.
So, really appreciate you being with us. We're going to get some housekeeping issues in before we start, and I really like to thank our fans and our customers that have supported us we just came out with an award, 2017 Best of Knoxville. So we really appreciate that and so excited about that award, really, because number one, it comes from our customers, all the hard work, all the dedication, long hours, and really just showing that traction here in the community. And so we really appreciate that.
Yes, thank you so much, Knoxville.
And we really do that. We wanted to spend and open the show with that because without you guys, it's not possible. I mean, obviously you trusted us with one of the largest investments that you're going to have. And so it's a big move. And there's a lot of realtors out there to make a choice, and we were honored by that selection, and then we're honored that you guys voted for us. So we really appreciate that, and it means a lot to us and our family. So we want to take a few minutes to thank you for that.
That's great. Yeah. So, and with that being said, let's go ahead and go into our topic, which is going to be first-time home buyers, what you should know before you buy. We're going to go through a small list and cover some major points. So if you have any questions about the home buying process, please don't hesitate to call us at 693-7653 and let us help you through the process. So first off, we're going to get down to the very, very basics, which is pay your bills. You got to pay your bills on time.
Well, it's important. Obviously this is a first house for some people, or maybe we say first house, but maybe it's been 5, 7, 10 years. It's been a while since you bought a property. And so that process can be daunting. It's a big task, and it can be overwhelming, but it can be very exciting. Purchase a home is one of the largest investments you're going to make, but one of the best investments you're going to make. It's something where you're going to grow and raise your family. It's one of the few investments that are out there to actually get a return on your money. That actually, when you buy it, you can actually sell it 5 or 10 years and make some money. Yeah. Unlike those things we have in the driveway out there.
Right.
So it's important to have some steps. It's always important, definitely, to have the right agent. And so as a trusted professional, they've been in the business for a long period of time, and it can hopefully guide you through that process into purchasing your next home. But let's talk about some of the things that are important before we get going. Number one, so if you're going to look at purchasing your new home, you've got to pay your bills on time. You've got to pay them. You can't have anything over 30 days late. Very important, keep your credit in line. Lenders are going to always look at the last 12 months of your history. They're going to watch for a 24-month cycle. So they're watching anything that you're late. If you pay a bill late, you may pay a higher interest rate. Or, worst case, you may not qualify for the loan. So that's very, very important. I'd say the first step that you want to do is definitely go to Credit Karma or some of those free credit sites. Check your credit. Get a baseline. Understand where your credit is. Know your score. Most lenders want a minimum of a 640 credit score. Some will go as low as 620. To get the best financing, you've got to be 680 and above. You've got to. There's 3 credit reporting agencies. There's Experian, TransUnion, and Equifax. You've got to know all those scores. Lenders do a merge. They're going to average the 3. So very, very important to know that before you get started. Employment, very important. Don't jump jobs. If you're thinking about purchasing a home in the next year or 2, stay consistent. Lenders want to see a track record of the same employment at least for 2 years. If it's the same line of work, you can jump jobs as long as it's in the same profession and hopefully for a bigger pay raise. So keep that in mind. Some credit dings. There's always some things out there some hardships, some things that were unexplained, like a bankruptcy, foreclosure, some things that happen. Life just happens, right? Our lenders deal with that on a consistent basis. But what they're wanting to do is reestablish credit. 2 years for a bankruptcy, 2 years to 3 years on a foreclosure, maybe longer. So very important that you reestablish credit, and after 2-3 years that you pay everything on time. Don't pay anything late. Very, very important.
Yes.
You must have some reserves.
Save your money.
Yeah, 3 to 6 months of reserves is recommended. If you can do more, that's very, very important. Life happens, right? So you want to definitely have some money put away for that rainy day fund. down payment. Once you have your reserve set up, always have your down payment. We'd like to see 20% ideally for your purchase. Sometimes it's not possible. You want to avoid the PMI, but the more is better. And you can talk to our office about what programs make sense. We've got a lot of first-time buyer programs. Like I said, a first-time buyer is anybody over the 7-year mark to 10-year mark that hasn't owned a home. So you still may qualify for a lot of those good programs.
And then the next step to get in touch with a good lender, that you need a good lender that knows what they're doing, that can get you a great rate and can walk you through the process and the steps of buying your first home to let you know those programs that are out there. So they will also check your credit score as well and tell you where you stand and where you need to be. Very
important, though. You don't want to call all around town. I mean, I think that's why it's important to get with a great agent and great contacts. It's never what you know, it's who you know. And if you pull your credit by multiple lenders, that can actually damage your score and actually can go down. So it's very important that you know what your situation is, what your credit score is, and we can direct you in the right lender that meets your needs and that's a good fit for you. And it's a lot harder to start with one lender and it's not going well with them and then try to jump to a different lender. Right. It makes the process a lot harder and a lot longer. Get with your agent. Get a strong agent that knows the market. These guys negotiate contracts every day. We think we're obviously a great choice, but get with your lender early on. Even if it's a 3 to 6 month process, knowing what schools, what areas are important, knowing what to expect in the process. It's a very important step. A lot of times buyers get the cart before the horse. They're out looking at the homes that maybe they don't qualify for, or there's a lot of hidden features that we just don't know about. And so it's very important to get with your agent, to have that relationship, and to get you pre-approved. Pre-approved is everything, because understanding your finance and having your loan done ahead of time puts you in the best position to negotiate. That's right. To get the best deal, the seller wants to know that you've got your financing, that when we submit an offer, that you can close in 30 days, that you can close in 15 days because you've done your preparation up front. Very, very important. Right. They'll look at that over someone who is not pre-qualified. What do we talk about a mortgage and what type of mortgage to get? We talked about first-time buyer loans. We've talked about conventional. There's FHA, the USDA. What does all that mean? We know that credit score is key. Budget, very important. Do you get a 15 or a 30 year? What's important? We always recommend our customers to get a 15-year mortgage if they can. 15 years always pays off in 15 years. Right. 30 years, you're paying double the interest. Now, I understand not everybody can, in the beginning, do a 15-year mortgage. But ideally, if your preparation is saving, putting money away, put a reserve fund, paying off debt, then you can be in that position that you could qualify. Usually the difference is just a small percentage from a 15 to a 30, but the interest savings is huge. Closing cost. That's a big one. Yeah. Closing costs usually run 3 to 4% of the sales price. And that's something that are buyers' responsibilities. A lot of times in our market, when we're negotiating, we're able to get those closing costs either paid or part of a concession that when we make offers. But you need to budget for 3 to 4% of the sales price along with your down payment. Right, just in case the seller doesn't accept to pay your closing costs. Sure. What is principal, interest, taxes, insurance? You may have heard that around. PITI, right? Yes. Have you ever heard of that? I have heard of that. Right. Principal, interest, taxes, insurance. That's what your monthly payment is made up of. And so very important, if you don't have the 20%, you may have something called private mortgage insurance. Private mortgage insurance is where if you don't pay your payment on time, they actually pay something monthly to the lender that if you don't pay and they take the property back, it's called foreclosure insurance. So it's that extra 60 or 80 bucks a month in your payment that is just wasted money. Right. So that's why it's so important to put 20% down. That way you don't have to pay it. Right. So we're talking about a lot of great topics here. We're going to finish that up on the other side of the break. We're going to be talking about principal, interest, tax, insurance, as we just talked about, a little bit more about title, a little bit about insurance, home insurance, and what is actually insurance for your title. Why is that important? Title insurance is so important, and when you talk about title insurance, it really comes into the position of, do you get owner's coverage or lender's coverage, and which one is a benefit? So we're going to talk about that on the other side of the break. HOAs, definitely want to stay tuned to that. Some of the great topics that we'll talk about on an HOA and the pros and cons regarding that.
Yeah, we're also going to talk about earnest money, inspection, why you should get an inspection, and just, some topics on why you should have some realistic expectations when you are looking at homes and why that is important. So we're going to be covering all of these topics here in just a second. So.
Hey, stay tuned. We'll see you on the other side of the break.
In the competitive real estate market, Ryan Coleman has a track record with guaranteed results.
Ryan made the sale of our home seamless. He was there every step of the way.
And our home sold the first week for full price.
With his knowledge and expertise, he took away all our worries.
And he got us much more money than we had ever expected.
Ryan is so confident that he will sell your home, he's willing to put his own money on the line. If he can't sell it in the time frame agreed upon up front, he'll buy it himself. Ryan Coleman with Hometown Realty, your home sold guaranteed.
Welcome back, guys. Thank you for staying with us. We're going to pick that topic up about title insurance and why that's important. We were talking about mortgage insurance and how that protects the lender. But we're going to talk about title insurance, how it also protects the lender, but more specifically you. Title insurance is a one-time deal, and it covers any liens or encumbrances that have come up through the house. It's called a chain of title. And what that title insurance does, if for some reason you won't see it when you purchase your home, but 5 years, 10 years down the road, when you go to sell, let's say there's an unreleased deed of trust, there's a judgment, a medical lien, something like that was on the title that somehow the title company missed, then that may stop you from selling the home. When you purchase owner's title insurance, it covers you, the owner, for the actual full purchase price or loan amount. There's a second title insurance called lender's coverage. Now, lender's coverage just protects the lender. So let's just say round numbers. We buy a $200,000 property. We put $100,000 down. The $100,000 would only cover the amount of the lender. The other $100,000, if you did not have title insurance, would be gone. So your $100,000 could be gone if there's an issue, or you're spending legal fees battling those issues to get them caught up and corrected. So that's why it's so important, the title insurance and that education on the front end. And usually the difference is a couple $100 between the owner's coverage and a lender's coverage.
Oh, wow.
So not much money, but you definitely want to get that coverage.
I really didn't know that. I thought it was just kind of something that the title company just wants to charge you for, that you just have to, tell them that you don't want it, and just because it costs a couple extra $100. And
we've seen it multiple times where there's IRS tax liens, there's TennCare releases. Somebody goes into the nursing home and it wasn't claimed. They did the title search. 3 years later, it's a cloud on title.
Oh, wow.
So what do you do at that point? What if you go hire a lawyer? That's $200 or $300 an hour just to battle that, and then you're being transferred to Texas. You need to move now. What are you going to do? That's why the title insurance is so important. It's peace of mind, and it stays with you for the life of the property, so you never have to deal with that. So we always recommend title insurance.
Good information.
Let's talk about some of the neighborhoods when you're selecting a home to purchase. What's important in that selection? Whether we're going to go HOAs. Does it have that HOA? Some customers don't want to have anything to do with an HOA, but there's a lot of pros and cons with that. And so those are some of the things I think, April, you're going to talk about.
Sure. I think that you need to look at an HOA. Some communities have an HOA that have very low fees. Some are voluntary, some are mandatory. And so you just kind of need to, before you purchase a home, ask for the HOA covenants, restrictions of that subdivision, so that you can look at everything and see what does it cover: swimming pools, street lights, how much are you going to have to pay per year, per month, quarterly, and then also, are there any restrictions? Some people love to live in a neighborhood where they have restrictions, because that means that you just can't, your neighbor next to you can't put a bunch of boats and junk and everything in their yard, and it keeps the community nice and fresh. Some care, some don't care. So you just need to think about that and see if that is somewhere where you want to live. But once you think about that, you need to first think about the homes that you want to look at, what you should know. Have realistic expectations. Don't get stuck on surface items that can be easily changed. If it has gold fixtures, is that something that you can change? I know a lot of people don't really want to deal with it. They don't want to fool with it. It's just one of those hassles. But if you are looking at price range, say, yes, you want to be in this community and this subdivision in this school zone, maybe the homes cost more and it's a little bit over your budget, but you found a home in your price range, and you got to do a little bit of fixing up, and you need to change out the carpet and the fixtures. Is it better to live in that community and that school zone and do those items yourself, or is it better to go to a different community where you can get more house at a better price, but you're in this community over here?
So some compromises. There's no perfect house, is there?
Right. There's no perfect house. You're not going to find it, even in construction, new construction homes. Oh my goodness. They have a 6-month and a 1-year warranty for a reason, because you think it looks perfect until you move in and you'll see all the little details that are wrong with the house. So you're not going to.
It sounds like you know that from experience there.
I do know that from experience. We won't give out hints, but I do know that a couple of times from experience. But just know that there is not a perfect house. There's a perfect house for you and your family, but construction-wise, you just need to be able to compromise. Like I said, do you go for a higher price or do you go for a lower price? And you just need to think about those things. And when you get in there, there's wallpaper on the walls. Well, you can take that down. Yeah, it's a task, but is the layout good? Is the square footage? Is the bedrooms, bath? Is it just a bones? Talking about the bones. Is it just a great house and you can just change those things?
So important, April, that some of our listeners to understand that with some of our products and our lending, and that's what we talk about getting with us on the front end, is we have some renovation loans. So that house that kind of needs a little love, needs a little TLC, we've got a program for that where you can renovate it and actually be the contractor yourself and sub a lot of that sweat equity into the property.
That's nice.
You can even put 6 months of payments in it while it's being fixed. So we've got some programs, some grants, some different things on those homes that maybe it's the right location, it's the right community. It just needs a little love.
Oh yeah, that's really nice.
And so that really gives where some of those homes may be excluded from your search. Now they can hopefully be added to. So keep that in mind.
Yes, and speaking of your search, that's another reason why you need to find a great agent that's going to work for you, because some of the homes you're doing your internet search, which is really great. You should get out there and, do some searches yourself, but also let the agent search on the MLS, because there are some homes that are on the MLS that are not out there that you may not be able to find. So
some pocket listings, some coming soon.
Right.
Yeah, very good.
Never know.
We get those all the time, and then we have a lot of agents that when they list a property, we're one of the first to know. So that's very important with the market and inventory where we're at. If you're not first, you're last, right?
Right.
So being there first could be that first offer versus competing offers. So that's very important.
Yes.
Let's talk about earnest money and some things that you're going to need when you purchase the property and actually go under contract. Earnest money depends on your purchase price, but you need to at least budget between probably $5,000 and $3,000 to put down. Earnest money, what is that? Well, earnest money is, I call it good faith. It's letting the seller know that you're serious about their property, and it's pretty much a hold. It goes into our escrow account, so it's held there in a neutral account, but it really lets the the seller, know that you're serious when they take the property off the market for a month or two. So the weaker your earnest money, the weaker your offer, right?
Yes.
If you're putting $5,000 or $10,000 down and you're serious about the offer, put a couple $1,000s down, put $5,000. The stronger the earnest money, the stronger the offer. And it helps with negotiation. Very, very important.
That's true. And that's why you need to, on the front end, save your money and know that it's a big purchase, and you need some cash.
Yep, need some money. And then, of course, understand when you put that earnest money down that you're going to get that back. So if you need $5,000 to go to closing, if you gave us $2,000, you can get $3,000 closing back. So it's going to be deducted from your down payment. So no worries there. Inspection. Let's talk about inspections.
That's a big
why
one.
they're important. We've got termite, we've got radon, and we've got a home inspection.
Mm-hmm.
All three very, very. And did I leave out pest? Did we go into termite?
You got
Don't forget the bugs. Don't forget the bugs. So termite's very, very key. And our buddy at Dayton over there, plug to Dayton, does our termite, does a great job. And so it's very, very important that you get those inspections, and they're in our contingency period, and we'll walk you through those.
Mm-hmm.
Radon in this area is prevalent, and so it's important that you check that as well. This show is closing really quickly and flying, but we've got a couple of things that we'd like to let you know about, and I think April's going to help us about that.
Yeah, so thank you for tuning in today. We really appreciate it. So in the spirit of giving this season with Thanksgiving and Christmas, we just want to thank everyone who has supported us. And by doing that, we are going to have an exciting giveaway that you want to stay tuned to see what the giveaway is going to be. Check us out on Facebook, Twitter. We're going to be announcing it very soon, what the giveaway is going to be. And it's going to be pretty exciting just to say thank you for all the support that you have given us. It's just going to be a simple click of a like and a share, so it's not going to be a big deal at all. So I hope you stay tuned for more information, and I hope you stay tuned next week. And I hope you liked our topic today. I hope it was very helpful. And
you guys have a great weekend.
yeah, happy Thanksgiving.
Happy Thanksgiving.
And Merry Christmas. Thank you.